Tengala, and today we have another video. As I promised you that the last time we talked about when to buy in a forex market. We talked about when to buy in a forex market. Then today we wanna talk about when to sell in the forex market, because I promised you that the next video is going to talk about when to buy, when to sell in a forex market. Now, without wasting time, because the time is not on our side, we want to just start immediately to talk about when to when to sell in a forex market. When do you sell in a forex market? When to sell in a forex market? When to sell in the forex market. When do you sell in the forex market? When I talked about when selling in the forex market, we are going to talk about when factors to be considered before entering a sell in the forex market. That's what we mean literally. When we talk about selling in the forex market, we're just going to talk about a bearish momentum, when to enter, what are the indicators or what are the factors to be considered or to be put in place to show you that this is a bearish momentum. The first thing we want to look about, the first thing you need to look about is the trend. One, the trend of the market, the trend of the market. We want to look about the trend of the market. First, check the trend of the market. Is the trend of the market is it a downward trend, upward trend? That's what you need to check first in the market, whether it is a downward trend or an upward trend. Today this is a CAD CHF. Let us confirm what is the trend in CAD CHF. What is the trend in CAD CHF? CAD CHF has been a downward trending. It has been a downward trending up to here. You don't know when, how. Let me draw a vertical line. As you can see, it has been a downward trend up to here. Sorry guys. Yeah, it has been a downward trend up to there. Then it started moving sideways. Let me draw it. Let me draw it. Sorry. Let me remove that drawing. It has been a downward trend. It has been a downward trend up to here. Up to here, as you can see. Then it started moving sideways, as you can see. It started moving sideways. This one now we are working on a sideways market. On a sideways market, what you look at when you want to sell or buy, and today in this scenario we are looking at when to sell. On a sideways market, always check on the higher low and lower low. Check on the higher low and lower low. But when in a downward trend, you always focus on a sell. When in a downward trend, you only focus on a sell. When in a sideways market, you can buy or sell, but mostly you are advised to avoid that given market. Like you avoid not to enter or to trade between that given period of time when the market is moving sideways. But for just a matter of learning, we want to talk about general things to see. We have talked about check out when the trend is moving downward. When the trend is moving upward, you always check out on the support and the resistance. When the market is at the resistance, you always look for a sell. Let us take this scenario. You can see a clear, this is a clear support, this is a clear resistance form. As you can see, it is a double top. Let me just draw it for you guys. Sorry. Today, yes, this one is a double top, double top. Now, this is a confirmed double top. When you are at the confirmed double top, what you always check on the sideways market, you always check on a sell. You always check on a sell. Now let me do something here. Sorry guys. When the market is, let me write it. When the market is moving sideways, and the market is moving sideways, and you are at the resistance, comma, we always look for a sell. We always look for a sell. Full stop. We always look for a sell. This is what we are talking about. When the market is moving sideways, and you are at the resistance, this is the resistance confirmed double top, we always look for a sell, not a sell, guys. This one should be a sell. Yes. Now, first you have to confirm, is this a double top? How do you confirm a double top? When this one was the first point of price, the second, it goes down, came back, never reached the support, and this one came back and reached at the never reached at the resistance. This one came up and reached at the resistance. What are you looking for here? When somebody, what are you looking for here? You're just looking for confirmation of a sell. The confirmation of a sell, when you are at the resistance, you are only looking for the candle patterns or candles confirmations, and you can also look for the indicators, the EMA, for it to confirm to you that is it a sell, a buy. You can also confirm with the indicators. That one is another confirmation you can make. You can also confirm with the market indicators. Let's go on. We have talked about when you want to buy. We have talked about these things. When you want to buy, we have talked about you look at when the market is moving. When the market is downward trend, you look for a sell. Full stop. And when the market is a sideways moving, comma, look for a sell at the resistance. Look for a sell at the resistance. When you are looking for a buy, look for the buy at the support. I think I've explained that clearly, and that one as you have gotten something. You have internalized something. Now, the next thing we're going to look for is the structure, the market structure. The next thing you're looking for when you wanna sell, look for the market structure. Look for the market structure. When I talk of market structure, what is market structure? The market structure is the market structure. The market structure is basically what the market forms. Is basically what the structure that the market forms at a given period of time. What does the market form? That one is what you look for. What does the market form? Is the market what is this market forming? Is the marketing forming a cup and handle? Is the marketing forming a low, high? Like let us look at the the card CHF which we were looking for today. You can see this one market was a sideways trending. But what is the structure of this market? This market has been forming a low, a low, high, a low, high. That one is what the market has been forming. We can draw it, guys. If you see from here, this market has been forming a high, low. Sorry, guys. It's okay. The market has been forming a high, low, a low, high, as you can see, and a high, low. You can confirm. Then a low, high, as you can see. Then a high, low. Then a low, high. This is now what is the market. This is what we call. This is what we mean by the market structure. On this chart where I am, I'm at the live market. As you can see, this is card CHF, and I even gave this signal to some of my clients. The market is downward trending, as you can see. I gave the signal at this point. I gave the signal at 69,198, and now it is at 69,015. That one is some good pips. People are in deep profit now. They are in deep profit, as you can see. Now look at the market structure. This market structure is forming high, low, and low, high. Now what do you look at? When the market is high at the support, at the resistance, you always look for a sell. When the market is always at the support, you can look at this place. You can look at this place, though it is not. It is a possible. What we call it is called a possible double bottom. Now, when the market is here, you always look for, because of this structure, you always look for a buy until the structure is broken. When the structure of a market is broken, you always look for a retest of that given market, of that given structure. Don't just enter the market. You look for a retest. It is when you enter that given market. Some structures form a cup and handle. Now, it depends on your understanding of that given structure, because mostly forex is also part of an art. Mostly forex is mostly part of an art. what you can see as a structure is different with what I am able to see as a structure. So you can get that everybody has got his own structure which he is seeing in that particular price movement. Now, the next thing we have looked for several things, and I hope you have understood. The next thing we are going to look at is the market indicators. When I talk of the market indicators, let us remove this. Sorry guys, I think we should just move all the drawings. Remove the drawings. Then, so now what we want to look at is the market indicators. Uh, 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 what is mostly in the market indicators I always use EMA. EMA is the exponential moving average. Exponential moving average. Mostly I use exponential moving average to to confirm whether I'm going to sell or buy in that given market. Now, because I've confirmed that this market was a sideways moving, and I confirmed that it was at a support, it was at a resistance, which means that one is one confirmation that this market should be this market should be selling. The second thing, I've confirmed the trend and confirmed the structure. Now I'm confirming with the market indicator. What is the market indicator showing me? Mostly I use the 200 EMA, which is my analysis. I always base them on hourly and daily basis. I always choose for this one for day. Sorry guys, it is too much. Hey, where is this thing moving us? Surely. Sawa. No. Let me remove these indicators for us to check what is really going on. I've removed those I'm removing these indicators. Now, the indicator I always use is the 200 EMA and 50 EMA and the 20 EMA. That one is on a 4 hour basis. I always look for them on 4 hour basis. 4 hour basis, not on a daily basis. 200 EMA. Yeah, I always use this. Now, I've been telling you that the first thing you want to look at when the 200 EMA the market is above the 200 EMA, you always look for buy. But in this case, the market is above the 200 EMA. Yes, this yellow one is the 200 EMA, but there are three factors that has confirmed that this market is selling. Now, for someone to be safe in this market, for someone to be very, very safe, for you to be very, very safe in that you have confirmed that all the factors given in that specific price movement is on your side, you have to wait for this market to break the 200 EMA. You have to wait for this market to break the 200 EMA, because we always say that when the market is above the 200 EMA, when the market is always above the 200 EMA, you always look for a sell. But look at this market. This market is approaching the 200 EMA. Maybe this market is coming to retest so that it goes back, because when the market always breaks the 200 EMA, it will always want to come back to retest, which means this market can come back here, retest, and moves back. I hope you get me, guys. Which means for the snipers or some serious traders will look at entries at the 200 EMA. Look at the entries on the 200 EMA. First, you confirm with you confirm with the pattern, the candle pattern confirmation. The candle pattern, how is the candles forming? It is when you enter this market when it hits the 200 EMA. But it can hit the 200 EMA, breaks the 200 EMA, breaks 20 EMA, and breaks 50 EMA. When it breaks all these EMAs, which means you always look for that one is a direct sell, a clear and a clean 100% sell. That one you don't have doubt about it. And when it is a direct sell, what you look at, what is your take profit? You always look at the first stop. This one is a demand zone. You always look at this zone. You always look at the market will move up to this zone, can move up to this zone, breaks, and moves also up to this zone. Now, you can put your take profit, the first take profit at the first zone, second zone, and when the market reaches here, always look for sell. It can either always look for buy. It can either buy or when the market breaks this zone and retests, look for a sell up to here. I hope you have understood. You look for a sell up to here. When the market breaks a structure, always wait for that market to retest. Even when the market breaks an EMA, always wait for that market to retest. It is when to enter that specific given market. Always wait for that market to retest. It is when you enter that specific given market. Then another indicator is the candlesticks. What are the candlesticks? We have talked about when you want to sell, we have talked about the indicator. The indicators I always use EMA, 200 EMA on an hourly basis, na 50 na 20 EMA. I have explained this many times on my previous videos. Now, the last thing we want to talk about when you want to confirm a sell is the candlesticks. Candlesticks. First, what are the candlesticks that confirms a bearish momentum? Those are the things we want to look about. But we have not talked about the candlestick formation, which we'll be talking about in our next coming videos. But today we just want to talk about them just in a brief time. But the next videos we will talk about them. Let me just give you an assignment. You go and confirm. First, the first candle we look at is the hanging man. Hanging man. You can go and confirm how the hanging man looks at, or you wait for the next video. It indicates a significant sell off during the day. It shows that the market will be selling, will be a strong sell during the day. That one is the hanging man. The next candle that confirms a sell, a confirmation that confirms a sell in the market is the shooting star. We have the shooting star. We'll talk about this in our next video. If you want this candlestick confirmation, just type down below so that we can make for you a video in the next coming days. The other one I want to talk about is the evening star. Is the evening star. These ones are just assignment I'm giving you, but we'll talk about them. The fourth one is the dark cloud. Is the dark cloud cover. And the fifth one is the bearish engulf candle. Bearish engulf candle. So guys, these are the candlestick formation is very important in looking at whether you wanna sell or buy. But when you want to sell, these are the formations to look at. We have the hanging man, shooting star, evening star, dark cloud cover, and the bearish engulf candle. We'll talk about them in our next coming videos. Candlestick formation is very key in forex trading, because it confirms very many things. It confirms a lot of things, guys. It confirms a lot of things. It confirms a lot of things. A lot and a lot. Now, uh, uh, there are some candlesticks that confirms that they, in the next coming time, there will be a reversal on the market. There are some confirming a buy, there are some confirming a sell, but these are the ones which confirms a sell in the market. And we will be talking about them in the coming videos. Guys, if you enjoyed this video, kindly subscribe. If you are a returning subscriber, kindly share and kindly comment down below for the type of videos you want us to create for you, so that we have more and more forex lesson. Thank you, and that one was my time.